Good morning, good afternoon, good evening, and welcome to The Nest. It's May 28th, 2020, and we are streaming live with participants from North America, Europe, Africa, and around the world. For those of you joining for the first time, I'm Jim Chu in San Francisco, California, and the goal here on The Nest is to connect entrepreneurs in frontier markets with angel investors worldwide. We stream live on Thursdays, and all episodes are recorded and available on our website, findthenest.org. Today, we'll be hearing pitches from two companies, both from Kenya. They'll be pitching to three angels, Laurel Namatz, Steve Tawia, and, joining us for the first time, Aniko Sigatbard. Pronounced it right, from Atlantica Ventures, a new VC fund for Sub-Saharan Africa. We'll hear all about them in a second, but before that, I have a couple of important announcements. So first of all, the Nest will be taking a 2-week hiatus, so our next Nest will be on Thursday, June 18th. Second, that next Nest will be done in collaboration with the Lion's Cage. We'll be focusing on investment opportunities from Southern Africa, and to be confirmed, we'll have some great angels on that show as well. So please, bear with us, and we hope to see you back on June 18th. All right, so before we get started, I'm going to cover a couple of technical tips. So for those of you in the audience, we want to hear from you. This is an interactive forum, and we've left it open specifically for your questions and comments. So everyone and anyone, please feel free to use the chat box, and let's hear what you think. And don't forget, you can use that chat box to make investments if you like. In the meantime, you can use that chat box to introduce yourself. Tell us who you are, what you do, what country you're from, and why you're here on the show. Let me introduce myself. My name is Jim Chu, and I'm based here in San Francisco, California. I invest in startups around the world, both on a personal basis and as well as with our company, Untapped. Our mission at Untapped is to support entrepreneurs in innovation in frontier markets through investment and technology. So if you're interested in innovative ways to invest in frontier markets such as Kenya, please get in touch with us. I'm at jim@untappedinc.com, and you can also find me on LinkedIn. All right, and I see Laurent has joined us. Welcome, Laurent. Would you like to start with introductions?
Sure. First of all, I want to congratulate you again, Jim, for this wonderful event that's helping so many smaller startups and that are giving an opportunity to find investors. And I'm particularly pleased to be here today. I'm the founder of R Ventures. It's an emerging market focused fund. I'm invested in Africa, for the past 23 years. I founded Global Voice Group, which is one of the premier regulatory technology company in Africa, providing services to 11 countries in Africa. So I've also founded LSL World Initiative, which is a think tank to bring development financing into African companies and giving insights to governments in Africa and how to be independent, financially independent, and complementing some of the international development aid with innovative ways of raising revenues without debt. So this is me, and that's my second Nest, and I'm very happy to be able to participate today and hopefully make a deal.
Great. Thanks for joining us again. Over to you, Steve, a returning angel.
Thank you very much, Jim. So my name is Steve Tawia. I'm originally from Ghana. I've got 20 years of experience across various industry. I used to be a sales trader in equity derivative, consultant, strategy, operational technology, and then also a fund of fund investor out of a 20 billion euro fund in Luxembourg, and essentially moved back to Ghana about 5 years ago. I've got a portfolio of about 10 companies as an angel investor, and really looking forward to actively invest in this downturn, because that's when the real deal happened. The Google, the Facebooks, etc., were created in a downturn, and I strongly believe that this is the time to invest in Africa. So that's why I'm here.
I second that. This is the time to invest. All right, thank you for joining us again. Welcome back. And now over to Aniko CD.
You don't have to repeat it again.
Practicing.
Yeah, thank you. Pleasure to be here. Thank you for the invitation. My name is Aniko Sigetvari. I'm a founding partner of Atlantica Ventures, which is an African impact-focused venture capital fund. We have our headquarters in Nigeria, but invest across the continent in the major markets and focus on seed to Series B investing. In our minds, seed is usually startups with already some revenue, so product market fit having been tested through revenue generation. And our verticals are fintech, agri-tech, logistics, IoT, digital security, and B2B e-commerce. And prior to Atlantica, I was the global head of the technology, media, and telecoms group at IFC for quite a few years. And otherwise, I have 22 plus years of emerging markets investment experience and over 16 years in Africa.
Great, welcome. And I believe your partner in the fund, EK, is based in Nigeria, is that right?
In Nigeria, yes, yes.
Wonderful, great.
He should be online as well.
You should be online as well. Welcome, EK. Well, let's see the results of the poll. So it looks like we have a good number from Africa and quite a few from Europe and North America as well. And even one person from South America. Where is the person from South America from? And we also have 3 from Asia. So I'm glad you're staying with us late tonight. All right, well, thank you all 3 of you for joining us and the rest of the audience as well. I think it's time to get moving with the show. So before we get started, just a few pitch guidelines. You'll have 5 minutes to pitch, and then we'll have another 10 minutes for questions and discussion, and hopefully some time for discussing deals as well. So I do want to note that we will cut you off at 5 minutes. So please stay concise with your presentations, and let's leave some time for discussion with the angels. On that note, I'd like to pass it over to our first group, Graham and Nilma from Zaidi. Graham, Nilma.
Cool. All right, let's get set up here.
Yeah.
All right.
Cool. And then we need to switch to this, and then we need to do that. All right, can everybody see that?
Not yet.
Now we see you.
No,
Not
not
yet.
yet.
Hello?
You guys look great. So.
Share screen. Oh, there we go. Yeah. There. Now, can you see it?
Now we can see. Yes.
Okay, perfect. Perfect.
Hi, I'm Nilma and this is Graham. We're the co-founders for Zaidi Technologies. The problem today that we're facing is that 70% of the milk in East Africa is moved through the informal value chain. And this is, too many links, highly inefficient, and we're unable to deliver value to the consumers and the producers. This also means that farmers are getting paid too little and consumers are getting really bad products for really high prices. The solution that Zaidi has is that we're digitizing the relationship between the farmers and the first level, that is the milk aggregators or the traders, as we call them. We then contract with these traders to then buy the milk at a very stable and fair price. And then after transporting and processing, we sell the milk through a network of IoT-enabled milk dispensing machines. These machines are installed in small shops in the urban areas. This also means that we get better quality products to consumers at a lower price, while dramatically increasing the value that is received by farmers. In this market each year, 14 billion liters of milk are managed just by the informal value chain. This is worth over 15 billion US dollars. By building a rapidly scalable digital network of dairy traders and farmers using a mobile phone application, we can deliver twice the value of farmers to the farmers and standing dairy organizations today. Zaidi will gain access to the farmers by partnering with dairy traders, providing the dairy traders with a mobile phone application, which they can then use to collect the milk. We will acquire market share by Zaidi installing these milk dispensing machines completely free of charge in these urban areas. Through branding and other sales initiatives, Zaidi will also support these shops to highlight where our milk dispensing machines are installed. Our competition. We compete directly with small informal brokers. These brokers move milk through a very murky value chain to their end consumers. We achieve higher efficiencies and what is possible by the brokers on multiple levels, but this will vastly outshine our offering to the farmers, traders, and the consumers. We also indirectly compete with the established dairy businesses, but when Zaidi achieves greater success in the market, this will inevitably draw the confidence of some of these milk buyers as well. We provide a positive impact to the entire value chain. One is to the farmers by being banked and increasing their earnings by 20% more, and this inevitably means life-changing benefits to them. The other side, the traders, doubling their business and access to stable markets. To the shopkeepers, they have seen an increase of 80% in the amount of profits that they take home by selling the milk. And to the consumers, where 40% lower prices than alternatives in the market. Today, we have over 900 farmers represented on our platform. They are managed by 23 milk traders, collecting over 115,000 US dollars of milk each month. We've identified 6 shops that are able to sell this milk to approximately 750 customers. We also have strong foundations of business partners who are helping us to deliver value on both ends of the value chain. Today, it costs us 35 shillings per liter to buy the milk from the farmers. It costs us another 11 shillings to process, transport, and sell each liter. And then it will be 62 shillings of sales, leaving us with a profit of 16 shillings, which means 26% of the gross margin. For every machine, we expect to sell 6,000 liters of milk. This generates around a profit of 96,000 Kenyan shillings, which gives us around 4 months payback period. This is a very highly lucrative business, but it is also very investment intensive. CapEx investments likely exceed the net profits by the first 18 to 24 months, obviously depending on the growth rates and the profits per milk dispensing machine. And cash flow break-even should be achieved around when we have 40 milk dispensing machines in the market, or we're selling an average of 6,000 liters of milk on a daily basis. Today, Zaidi is asking the Nest for an investment of 42,000 US dollars of blended capital. This investment will enable us to buy 6 more milk dispensing machines. It will also help us develop the version 2 of our mobile application and allow us to test 3 value-adding products for our farmers. Thank you.
Thank you very much. Right on time. Thank you for sticking to the time. Well, wonderful. Over to the angels. Well, while we're waiting for
maybe I can jump in. Thank you very much, Noma, for the introduction. In this value chain, where do you think your key relationships are? Is it with the farmers, the traders, shop owners, all 3 of them?
For that, I would say the key relationships are with the dairy traders for whom we provide the mobile application, because they are really our access point to the farmers. And then for the shopkeepers, because they're the ones that we contract with to house the ATMs or the milk dispensing machines, and they're our access point to the market.
Okay, so as a follow-on question, if you don't mind, your main relationship on the sourcing supply side is the traders. How do you guys ensure that there's consistency of volume, quality, price, tracing and testing to make sure that I don't know how often the milk is collected and how it's stored. Maybe you guys can walk us through that process, but how do you ensure that your products that you're delivering to the ATMs are consistent in volume, quality?
Yeah, for most of it is kind of balanced out because it's a very modular system. So if we ever have trouble with any single trader, we can just find a different trader. There's thousands of them on the open market. You know, we have a lot of transparency because we're able to see the collections that the traders are making of the milk from the farmers. So we can get a good sense of you know, what's happening there. Then, you know, we are able to control quality along the value chain. We currently collect it from the trader, and that we do a quality control check that we can decide not to buy the milk or to buy the milk when we collect it from those traders. And then again, it gets quality controlled by a third party when we process it, because we're processing it at a third party. So, you know, one of the big things is variability in the dairy sector. I think everybody who understands the dairy sector will see that there's seasonality to it. That's something that we can really regulate quite well by turning on and off dairy traders. So deciding when to buy from certain traders and other traders, we can really stabilize our access to market for the milk.
Okay, and in this value chain, how often do you collect the milk, and then after it's processed, do you store it or it's immediately delivered to the ATMs? I'm trying to figure out whether you hold inventory, do you have a working capital kind of potential issue or not? That's basically the bottom of the question.
Yeah, perfect. So we buy it, it's collected at 8 o'clock in the morning from its point of collection. It's transported, it's processed, and it's delivered to its point of sale by about 2 p.m. in the afternoon. By 7 a.m. in the morning, it's sold again, or it's completely sold to consumers. We kind of let go of it in terms of it's not our responsibility anymore, and we're owed for it at the point of sale. So once we buy it at 8 o'clock in the morning, we sell it by 2 p.m. in the afternoon. It's not held in inventory. There's no working capital there.
It's a daily process.
Yeah.
So you sell it, you pick it up at 8 a.m. and you pay immediately, or you pay a couple of days later? And then how do you collect the money, and who do you collect
This is actually
from?
something that's pretty. Yeah. So it's a kind of cool aspect of the business because we get paid in cash upon delivery to the milk ATMs on a daily basis. Mm-hmm. And then we pay farmers and traders on a weekly or bi-weekly or monthly basis. So we're actually cash rich.
Okay, so you're positive in working capital.
Gotcha. So there's a related question from Harsh about the quality of milk in the value chain. How do you ensure the quality stays good?
You know, ultimately we can do third-party checks, we can do quality control checks, but the best way to assure quality is to invest in the farmers and to give them the tools, give them the education, give them the things they need to make quality milk. And that's, you know, that's kind of stopping the cause rather than treating a symptom. So that's really our long-term play to head off quality issues. Because I mean, you look at some other large dairy businesses, and they buy exclusively from large farmers like cheese companies, and they do that because they are seeking quality assurance. And the best way to head that off is to kind of reinvest up the value chain, and that's kind of what we've tried to highlight to you guys here.
Right. So, a comment from Corinne Bozina from Down Communities. She mentions that her belief is that maintaining the quality of the milk will be one of the biggest challenges for the milk ATMs in Kenya. So, any response to that?
Yeah, absolutely. After speaking with a lot of the Kenyan government regulators around milk, the KDB, they've highlighted that these kind of informal brokers are one of the leading causes for the bad quality milk at ATMs. And when we survey customers, this is very true as well. Their leading thing is we don't trust it. We don't, it's not trustworthy. We don't know where the milk comes from. It doesn't make good tea. It's thin. These are often things because we don't know what happens in that middle ground between trader selling to a broker and that broker somehow getting it to the market. But the farmers aren't the ones adulterating the milk, and we can catch that. So that's not a big concern to us. And then if we own the value chain after that point, it's something that's in our control.
Sorry, just to follow up. Sorry, go ahead, Jim.
Please, no, go ahead.
I was just trying to understand still the process of getting the milk to the ATM. So it's being checked at the traders, then it's picked up by a cold chain logistics provider to take it to the processor, or the processor who picks it up and then who takes it from the processor to the ATM?
Yeah, we pick it up with our own truck. A partner's truck. We work with a company called AMI Truck to do this. So we don't own the trucks, but they're a partner logistics company that manages it for us. So we don't have to own the vehicles or have these employees on salary, which means that we can upgrade the trucks as we need to, or replace the employees if we need to. So it gets picked up by them and transported to a third party for processing. They have to wait about 45 minutes to get it processed. It takes about 30 minutes to get to that processing facility. And then they wait about 45 minutes to get it processed. It's chilled down to about 1 or 2 degrees, and then delivered to the ATMs, which are chilled. So we see about a 2-degree increase in temperature between chilling or processor and ATM, and then the ATMs are at 3 degrees. So it is fairly cold chain. Ultimately, we want to get to a scale where it makes sense to have it, a little bit more cold chain, like the farmer delivers it to a chiller, it gets picked up in a special truck and delivered all the way through processing, but it's just not feasible at this point in time.
So it's right now the same company who picks up from the trader and takes it to the processor, and then the same company from there to the ATMs?
Yeah, exactly.
And they have, is it cold storage with IoT on it and the like, or what was the setup to ensure that the high quality of the milk remains?
The points of sale are the IoT enabled pieces. And then the trucks are just pickup trucks. They're not actually cold chain reefer trucks. That's something that we can't afford at this point because that comes from trucks. So
perhaps related to Nico's question, are there sensors in the ATMs themselves that monitor the conditions within the ATM or the quality of the milk on an ongoing basis remotely? Because at scale, this could be quite difficult to manage, right? Managing quality of milk of a perishable product at scale in a decentralized network of ATMs, that could be quite challenging.
Yeah, Yeah, absolutely. That's the point of the IoT, is to monitor the temperature, monitor whether, you know, how many times the door has been opened, to stop adulteration, to stop the ability for them to move the ATM, to monitor if there's electricity going to the system, so that we can see that, all those sort of things. So yeah, exactly.
Okay. Laurent, Steve?
Yeah, I had a couple of questions that have been answered actually. Let me come in. In fact, knowing Kenya pretty well, I was thinking about one, electricity, you can have power cuts, so you answered it. The quality assurance of the milk, you answered it as well. I think one of the things I want you to kind of understand very well is, or at least give information and see if you know about it, the dairy industry in Kenya is more or less like a cartel, to be honest, right? And there's potentially one person who's buying out a number of the dairy farms. And
I know who he
I
is.
don't, yes, I don't want to mention the name because it'd be politically incorrect, but so essentially that's a bit of a touchy industry to touch in Kenya, right? So if things push to shove, have you looked at how the regulation around it is set up so that it can be protected for any change in, you know, who is allowed to do what you're doing? Have you looked into that?
Yeah, so one of the things is that, yeah, on two fronts. Well, there's three kind of points I want to make. More might come to me. The first is that we're working. The Kenyan Dairy Board has just started the process of auditing the new laws around bulk milk, which is kind of our industry, which is the milk ATMs, right? So we're actively partaking in those conversations and working with them, and leading their charge. And I'm talking to KDB about like the different ATMs that are out there and how we can prevent adulteration or prevent these things like power cuts with UPSs, those sort of things. The second thing I wanted to say was about, just about the competition angle, is that, people say that we're gonna, that's kind of the first thing that people jump to, is like, you're gonna go toe to toe with the big man who we won't name. But we're really not in a lot of ways, because we're basically vacuuming up a lot of the industry that they've been unable to get a hold of. We're taking a lot of the formal milk. So this is not milk that they're touching today. This is milk that's going through other channels. So actually, having
sorry to interrupt.
I don't actually know.
Just 1 minute. It seems that one of the people here doesn't have his mic cut. I couldn't hear you very well for part of it.
That's fine.
Okay, I think it's okay now. It's okay now. Yeah, it's okay now. Yeah.
Yeah. So I don't know exactly where you cut off, but
no. So you were saying competition, and so yeah. So what I understand is that you don't feel you are competing. It's more probably partnership, or helping channel more milk into market. So that on that side, I kind of understand, right?
Yeah. It's like formalizing the aspect of the milk that isn't being touched by these large formal cooperatives, right? They're only handling 30% of the milk, 35% of the milk in the country. The last point I'd like to make is just that they've actually sold most of their business to Danone, which is a French company. So that's on our exit list, right? That's our exit strategy, is to kind of grow to a point where we get noticed by them and be like, oh wow, look at what they're doing. They're doing this amazing thing, and they're accessing milk that we don't know how to access right now. So let's talk to them. Let's figure out how to either
Careful what you say. There are some
people
on this call.
pay them to do it for us.
Sorry, Jim.
I said, be careful what you say or what you wish for, because there are some people from Danone on this call. So
Cool.
So there was a question from Sean Durkin, I think, related to what you're saying. So some of the relationship between the informal delivery folks is a long-term relationship based on trust. Do you see issues with overcoming that trust barrier, coming as a new brand, as a new player?
Okay, Jim, I'm sorry, I can't hear you.
Yeah. So I was saying whether there is a potential for, well, so the informal markets are built on trust between the informal delivery folks and the farmers. How will you as a new brand be able to develop that trust relationship with the farmers?
Well, the answer is we don't have to, because we're working with the traders who already have that trust. So it's how do we gain the trust of the trader who has a 50-to-1 lever over farmers, right? So they have about 50 farmers. And I think the primary driver of it is value offering. So, you know, we walk up to a trader and we basically say, hey, like you are competing against other traders on the same playing field. If we give you this mobile platform, we'll give you and your farmers all the benefits of the formal sector, like, you know, everything that the formal cooperatives can offer you, while maintaining all the values and benefits that the informal sector has to offer, all on this mobile platform. So now you have a better value proposition than any dairy trader around you. And it's 100% free. And the only thing you have to do is sell your milk to us through a, you know, hopefully more stable and more effective value chain than what you've been selling it through.
Thanks for
May I
that.
ask,
Laurent?
Yeah. So my
That kind
first
of
of
answer your
all,
question, Jim?
Yes, it was a question from Sean Durkin. Yes, I believe so. He says thank you.
okay. So I wanted to first of all, I want to congratulate you for the presentation. I think it's very, you know, clear and to the point. I'm not very familiar with Kenya as a country. But the question I have is on the founders, your background, and how did you develop the passion for this particular venture? And that's the first one. What makes you want to do this? And the second question is you know, what's your vision for growth of this product? That's the second. And then the third one is how are you currently marketing this this service throughout the country, and how do you avoid what's your strategy to avoid the cartels? So that's 4 questions.
Okay, let me, but yeah, maybe try to remember them for.
Yeah.
So
Background.
the first is the background. So I give you my background. I came here in 2011 and started working with smallholder dairy farmers to do biogas. And then I did that for 4 years, 5 years really. And then I started a company called Lishabora, which was trying to provide farm inputs to smallholder farmers. And that was a credit nightmare. And so that was where I really learned about the problem that we're trying to solve here today. After Lishabora came to an end, I decided that I wanted to, I took a little hiatus, but then I came to trying to solve this problem, and I knew I needed somebody to do it with. And so I recruited Nilma to join me and start this business with me to do this. Yeah, and then you want to give your background?
Yeah, so I have been in the entrepreneur journey for about 10 years. But when, you know, Graham approached me with this particular business model, I quickly realized that it speaks very highly to a value that I have, which is, you know, social justice, and more also relevant to like the social impact and the value that, you know, we would be giving to the poorest of the poor in East Africa, well, starting with Kenya first.
Yeah.
And yeah, so I quickly took to it. It was exciting, learning a lot more about the agriculture sector in, from scratch as well. But yeah, he did a pretty good job, and now we are doing a pretty amazing job with our dairy farmers and traders as well. So.
What was the question? Question 2 is cartels. What was question 2?
No, about your growth marketing.
Yeah.
Oh, growth and marketing. On the farmer side or the trader side, or just in general?
In general.
Okay. So to grow, growing the traders is actually a very organic process. I've been working with these traders for the last 7 months, really. You tell one about it, and then they go and tell their friends. And without much ado about nothing, I've been able to get 23 of them using the app, and I know about, we met 35, 40 of them, something like that, just through word of mouth. And that's, so having somebody on the ground to provide them with, customer service and to actively try and search for them will help a lot in growing that very quickly. So that's kind of the supply side. I think that, again, Trader has about 40 to 50 farmers. So we should be able to, we shouldn't be constrained by the access we have to the milk. On the marketing side for the milk ATMs, really the driving factor is the commission that the sales give the shopkeepers. And so that's something that, we heavily negotiate with every single shopkeeper we onboard. But it usually falls between 3 and 5 shillings per liter of milk sold. When they get the ATMs, what we're hoping is that they see the immediate increase in their profits, and we'll help them observe that through kind of M&E and stuff like that. And then we do all the marketing, sales, branding, and stuff for them, because it's ultimately pretty affordable for those locations. Does that kind of answer your questions?
Yeah.
Okay, cool. And then your last one was just about cartels and like the cartel nature of the industry.
How do you get around it? Because I understand that, what you're doing is bringing a lot more transparency and democratizing the space. So how do you go around, threatening the business of some influenced people?
Well, yeah. So so actually the biggest concern we have for cartels is actually at the shop level, where the understanding that we have about the people that are buying the milk, what we described as the brokers in our pitch, the buyers from the traders, they're individuals, and we don't know much about them or who they sell milk to, which is a bit of a shadowy game. We can't really get in there to understand them. But a lot of times they tell us that they're individuals and they're buying the milk and they're gonna sell it to a customer or 2 customers. What we are guessing is that they're selling it to cooperatives or dairy processing facilities like the one we're actually using to process the milk. But at the shopkeeper level, the shopkeepers actually have to kind of quote unquote pay for protection from cartels, which is not great. And then to bring in new businesses costs a lot of money. But what's nice about the business model is that we're not bringing in a new business, we're upgrading the current ones. So we're helping, just like the shopkeeper can have a Coca-Cola fridge and not have to pay these cartels to have an extra Coca-Cola fridge, they don't have to pay these cartels to have a Zaidi milk ATM. So we've raised that question with about 15 shopkeepers that we've done interviews with, and none of them have said that they're worried about it at this point. So I'm not too concerned in regards to that aspect of it.
And in the initial money that how much have you invested from your own funds in this venture?
Yeah, personally, I put in about $20,000.
20,000. Okay.
Yeah.
Before
And a
we
lot
get
of that,
into maybe some, sorry, go ahead, Graham.
yeah, I was going to say a lot of that is my time and kind of my living expenses while I'm developing it, while I'm finding Noma, while I've been, working on it, I bought, phones to work with traders and get them on board. I hired people to do that, sales reps, stuff like that. So, yeah.
Okay. Thank you.
Another question, if I may ask, and that's around the defensibility of your business. What's the moat around it? What's special that is going to make it harder for competition to get in and replicate?
Yeah, I think what's interesting is that, like, dairy cooperatives, if you think about the different businesses that might want to do this, a dairy cooperative has a lot of incentive to do this. But then are they the type of organization to develop a mobile platform, completely change how they're collecting the milk, who they're collecting it from, and how they pay their farmers and the value offerings that they're giving their farmers? I find that hard to believe, knowing the cooperatives I know and the people who lead them, and the organizations that they are. The second area, might be like a tech-based company, but a tech-based company probably is a bit of a struggle to, like, we were working with companies like Virtual City, Mezzanine. There's a couple others that do this for cooperatives. They have software that they give to dairy cooperatives to digitize them, digitize the collections. They can give loans and all this stuff. They're kind of software as an end in of itself. We're very much a software as a means to an end. We don't charge for the software. The software is used as a means to another end. So it'd be hard to see them also kind of getting into it. I think that it's an interesting, it's kind of an interesting business model that falls in between a lot of these other businesses that I don't think are really well positioned to come into it. I mean, I think our highest risk of competition is somebody who has the means and the know-how and the capital behind them to steal our idea and kind of run with it. But then this idea was formed out of my 5 years of experience working with these traders and these farmers. It's not something that's is necessarily visible. It's not a problem that's really easy to find if you're not willing to do that and you're not willing to get your hands dirty.
Thanks for that. We're starting to run a bit short on time, so sorry about that. Love to hear from the angels on what they think about this investment. But while you're thinking about that briefly, let me just read off a couple of notes from the audience. Anastella Mumbi has a good connection for you with a mechatronics engineer, so get in touch with her. Her information's in the chat box. And Corinne Bazina has also volunteered to be a contact. She is from Danny Communities and has a tremendous amount of experience dealing with dairy value chain. She believes that there's a strong need, but also many challenges associated with the model. So please get in touch with her.
Perfect.
Great.
Yeah.
Now over to the angels for their thoughts.
Maybe I can start.
Oh, go ahead, Steve.
All right, no problem. Okay, so I mean, thank you very much for the presentation and the actually the innovative idea. Having been, as I said, in Kenya for some time, I've seen a number of models targeting the informal sector, and I think that is one that I think can make inroads. I would say that probably, I don't know if you're working with them, but the likes of SocoWatch, obviously Sandy, but I think SocoWatch is probably the one that I would really look into to see if you can partner with them, because essentially they're targeting the informal sector as well, and really, could be a good way to kind of scale your operation with a partner. So at least for me, I'll pass for simply one reason. I think I'll need to see a bit more traction. I can see that you have some, but as I said, I've given you a bit my concern on the ecosystem and how potentially in terms of regulation, how things can go. Even though I'll keep an eye on you, especially because you're in very early stages, and this is what I like very early stages. You're looking for 42K, which is really a range that I like. So I'll keep an eye. I'm sure we'll get in touch again, and I can really look at you a bit later in terms of traction for me.
Thanks, Steve.
Okay.
Yeah. Can I give a rebuttal? No, I just want to say thank you. I appreciate it. And yeah, we'll definitely try and keep in touch. We are trying to launch a bit more of a revenue pilot the ATMs actually starting next week on Monday. So so we're really looking forward to keeping in touch there.
Yeah.
Okay. Thank you.
So from our side, maybe I'll jump in a second. As Atlantica Ventures, this generally is in the sweet spot of our strategy of agri-tech IoT. I think a little bit early for us because we usually do seed investments, which means some traction on the revenue side. But I really like what you guys are doing. I have a bunch of questions. I would love to get into more detail with you offline and then see how we can, start supporting you now and hopefully kind of medium term also support you with funding. We have an investee company, Sandy was mentioned earlier. I liked it better than SocoWatch because it's our investee company. See maybe how we can tie something together with them. So would love to chat afterwards, and my partner Ike is on the line as well, just to start better understanding, see how we can assist now, and then hopefully medium term also fund.
Cool. All right. Thank you very much, Anika.
So, thank you. Can you hear me?
Yes, we can hear you.
Oh, okay. So, guys, thank you very much. I think, first of all, congratulations on coming up with a very good idea. On our side, I have concerns on the scalability of the model. I think it's a little bit too early for us, so we'll pass on this.
Great, thanks, Laurent. From Untap's side, we might be interested not so much in an equity investment, but in seeing if we might be able to work with you when you start getting ready to scale up on the asset financing side. So as you know, that's our focus on providing some of the financing for IoT-based systems for the assets for your scale up. So when we get to that point, I think I'd love to have that conversation with you so that we can assess whether it makes sense for Untap to be able to finance you. Great. Well, thank you.
That's awesome, Jim. Thank you.
Graham and Nilma. Appreciate you with the presentation and all the questions. And we'll do our best to connect you with everybody that's in the chat who has offered their help. And of course, with Nico and Steve as well. Thank you.
Yeah, wonderful. Thanks so much, you guys. Really appreciate the opportunity.
Thank you very much.
Thank you.
All right. Now, let's go over to Ramuel. Are you ready for your presentation?
Yep. Thank you, Graham, for the nice presentation.
Great. Go ahead.
All right. So you can see my screen?
Yes, we can.
Okay. All right. So my name is Bramwell Mwalo. I'm the founder and managing director of Zetova. Basically, I'll just run through in terms of give context in terms of how business is positioned in the procurement marketplace. As we are well aware, it's a vast marketplace. So to define what Zetova is, first of all, it needs to understand how procurement really works in Africa. And you know, in this particular part of the world, procurement is not just a method of buying for large-scale companies. It's actually probably a policy operation. It's an opportunity for a lot of large companies to include smaller companies in the value chain. So using that description of what procurement is in Africa, where it's a structured buying of goods and services, mostly through third parties, which are smaller companies by, you know, large-scale buyers who are mostly established large companies. And in this case, you know, most of them probably are government agencies, corporates, NGOs like the UN organizations and the likes in Africa. And they provide, you know, purchase, you know, documents which could run from $1,000 to $3 million. So that's the context of procurement marketplace that we are operating in. So Zetova is, in a nutshell, is an interactive platform that enhances collaboration between all key actors in the procurement marketplace. And these key actors are basically the large-scale buyers, the suppliers, and the financials, and as I've explained before. Now, in terms of actually how the marketplace looks like, in Africa, it is approximated at about $500 billion worth of finished goods. And finished goods, I mean ICT equipment, industrial equipment, healthcare, you know, products, both, you know, pharmaceutical and non-pharmaceutical. You know, the amount of spend on it is more than 500 billion. And collectively through procurement, an equivalent of 40% of the GDP is actually spent through procurement processes. So, and then totaling up, you know, over 30 million purchase orders are issued annually across the different sectors. And for companies that buy more than $20 million worth of goods every year have, you know, at least 200 suppliers, you know, attached to them. So if you look at it in essence, procurement runs Africa's trade. It basically, you know, it supports also the key supply chains, you know, healthcare, food chains across the continent. And these are mostly run and supported by the government and NGOs and, you know, some development organizations. So looking at one of the marketplaces that is sort of the heart of Africa's trade, I would say procurement is significant in the economy. It determines in terms of how many SMEs actually grow. You know, it determines in terms of various policies around, you know, various fiscal policies are implemented and all. And looking at it from the buyer, supply, and financial, the problems around procurement comes mostly in how the KPIs in procurement are implemented. Like the buyer, most of the key performance indices that they measure or they're held accountable to is, you know, do they have visibility of the process or the buying process, you know, from start to end, from the purchase order is requested to the point the goods are paid for, you know, from the supplier with the whole policy involvement in it, where you have smaller companies that probably don't have capacity to buy or, you know, deliver big orders. Do they have the capacity to access the financing or finance some of these orders? Then you look at the financials, where there's a growing call for more financials to support SMEs on the continent. And then again, where do they get the information to support these you know, suppliers? And a lot of statistics show that about 70% of SMEs in Africa, when they request for financing for these orders, they get rejected because either there's no information about their performance, and then there is no really information in terms of, they don't have probably data about their performance, or they don't have security. So in solving this problem, in solving this problem, there has been a lot of initiatives in the procurement sector in terms of digitizing procurement. And a lot of them has been around, building software, probably software for tendering, software for, marketplace software where you have an index of products, where you have a few products which can be bought, online, or, there's probably an interest module, or there's SharePoint. So there are various many softwares that have been built. But if you look at procurement, really, as I've explained, procurement is beyond just software. Procurement is how do you organize, policy operations? How do you organize efficiency? How do you manage obligations around those procurement deals? And then how do you manage your performance in terms of tracking it and reporting on it? So what Zetova has done, Zetova has basically looked at procurement in its context in Africa from a policy implementation point of view, from an operations efficiency point of view, from an obligation management point of view, and from a product tracking. And we have now built an interactive platform that is able to allow collaboration between the key actors, provide visibility in the process of delivering these orders, and then also provide real-time reports that add value in the management process. So
sorry to interrupt, Rami. We are running a bit, so you're a bit beyond your 5 minutes. So if we could try to wrap up as soon as possible, that'd be great.
Okay. So in terms of the technology, the technology really is focused on providing an infrastructure that allows sharing of information, collaboration, and tracking of the real time. So I'll basically just give in a nutshell. It's the way you buy a phone from Jumia. You're able to track and see that phone wherever it is, and at any given point. So buying 100 phones or 1,000 phones in a procurement deal, you don't know where it is. It depends on you calling the supplier all the time and finding out where it is, and that's the nature of procurement. So the platform is able to provide level of visibility and from when you order, from when these goods land on your table, and how this information actually the performance information of the supplier can be used by the financier to be able to extend credit to them. So we've been able to actually so this is how the whole concept makes money. So we are basically through the platform we're able to enhance access to finance. Some of the suppliers pay for subscription because of the benefits they're able to achieve to get from the platform. And then some of the buyers, if they need very curated features on their systems, they pay for it. So those are some of the features. The core team, I have a core team of about 4. These are the leaders of some of the developments that we're doing. And in a summary, this is where we are. So technically, what we've done. So this is a cash-heavy business. So we started out about 9 months ago. 9 months ago, we focused a lot of what we have done in building the product, in understanding the ecosystem, building the product, building the software, testing it out, and engaging some of the key actors, in giving us feedback and running those iterations in the product. So right now we are at a state where we are going to the market, and we have just signed a few deals with some of the key participants, which probably with the questions from the audience will be able to probably give more details. But in summary, this is where we are as the talker.
Okay, great. Well, thank you for that presentation. Over to the angels. Questions, comments?
I can start. So first of all, very good presentation. I have a few questions. In terms of how much are you charging for your subscription right now? I mean, is that the business model? Do you think that this is a model that's more or better used as a B2G model? I mean, what type of clients do you think would be more favorable to using this platform? And then in terms of the money that you're going to be raised, you said 45% will go into product development support. In terms of marketing, what's your marketing strategy to blow it up and to scale it?
Good. So in terms of users, so there are three users of the platform. The first one is the first user is the buyer, the large scale buyer, which is probably a government agency or a corporation or an NGO. Those are in terms of the classification of a buyer. So a buyer is anybody who's buying. So for the buyers, the platform technically is 60% of the features they can access it for free. Reason why that is the case is because they provide the data that allows us to actually share, access the financiers who will use the data to lend to the SMEs. So in essence, that is it. So in terms of the traction that we actually have a pipeline. Like currently we're deploying to one of the leading government, one of the tier 1 government agencies, a corporation that is using our platform to visualize some of the data they have. So, and they're paying for it. So in terms of subscription, so they're paying deployment fee and probably about $5,000, about 500,000 shillings a year. So in terms of subscription. To more central government, for instance, the ministries, because procurement, 80% of procurement is basically the government opportunity. So the mainstream ministries of the government, they like the conversations we're having right now, they prefer to have as their own, they own the process. So technically, we will charge them to own the software and then probably pay $5,000 a year for subscription in terms of support and maintenance. That is in terms of the buy. For the suppliers, because of how they are, the benefits they're accessing. For instance, there's a project we are about to launch. It's called Linda Afia. Linda Afia is basically one of the COVID projects we've been able to come across. So Linda Afia simply is to finance Kenyan upstream medical product suppliers who sell that are not really small companies, but they're categorized as SMEs. So they supply medical products to Kenya Medical Supplies Agency. So the product that we're about to launch is to support them access, financing in less than 48 hours, and we're talking about financing of, from $50,000 to up to, $2 million per order in under 48 hours, unsecured. And then, so it provides that level which they cannot get anywhere else in the market. So those are some of the opportunities. So to access that kind of opportunity, charging that supplier about probably 50,000 shillings, that's about $500 a year, it's something reasonable. And then once they access financing on the platform, we charge, a platform fee on that on what they've been able to receive. So in essence, yes, the subscription fee works based on the value, benefit that they get on the platform. For the financier, it's more of the commission sharing that we have with them in terms of the amount of deals they finance. So we get a commission per deal they finance.
Great. And in terms of on your revenue, what's your current revenue right now?
So currently, in terms of the state where we are, we are we are basically starting our revenue planning. So right now, actually, the reason why we are out here looking for the 150,000 is because we have a contract that we need to accelerate its deployment. And so from the test we did in terms of does this model really work, we made about $10,000 from financing of about, a financing of about $4 million that was tested on the platform. So that's the revenue that we captured in terms of and that test we did between December and February this year. So going forward right now, we have like one of the contracts we have right now, the agreements we have with the bank is to, one of the contracts we have with one of the tier 1 banks in Kenya is right now is to open the system to suppliers who are supplying to one of our users who's a major medical buyer. And for every, and they are opening a trade line of about $10 million. So from that $10 million, every deal they finance, we earn 1% from the bank side and 0.5% from the supplier side. So that's how we are earning revenue. And that it's a 1-year pilot test. We are going to onboard through that contract about 5 more supply big buyers, and we anticipate, in terms of growing that whole pipeline from this one financial, this one tier 1 bank that we have, to be able to make revenue. So the potential in terms of making revenue is about $120,000 a month because of the kind of demand. That is actually if we are able to fund 40% of all the financing demand requests that are channeled through the platform. So that's basically how we organize. So in terms of go-to-market and how we are marketing this, so you realize procurement is a dicey area. So first of all, the system brings a lot of visibility and a lot of structuring in the sector. So what we've done is we basically deployed our go-to-market based on our go-to-market strategy is based on the beneficiaries of most of the procurement deal. Number 1 is the bank. Number 2 is the supplier who really wants to deliver the deal faster and get paid faster. And number 2 is the custodian of the procurement KPIs. So in terms of building a strong system, so right now we have a contract with a bank to be able to help them use our system to manage their corporate clients. Now the bank I'm talking about, banks 80% of government and 80% of some of the DFI projects that so in essence that is, so the bank onboards for us, the corporates, the bank onboards for us the suppliers. So technically that checks the end to end. So we are not really involved in dealing with the politics of procurement.
Brendan, if you wouldn't mind, I'm still trying to understand the model a little bit, because to me it sounds like a sort of ideas of a two-sided marketplace, and those tend to work well when you have many buyers and many suppliers, but it's very disaggregated and they can't find each other, and the marketplace brings them together for price discovery and the like. So who are in your idea about who are the customers here, and how do they take advantage of the opportunity and who are the suppliers, and how many SKUs would a customer want to purchase through this? Just a little better understanding of what you have in mind, please.
Okay. So Zetora's customer, the person who we need to transact to make money on the platform, is the supplier. The supplier is a small business that receives an order from probably a large entity. So for us, the supplier is basically our customer, because through the supplier, Zetora is able to make money. Now, why is the buyer important to us? Because the platform is more of an intelligence. It's more of an intelligence platform that connects data, buying and then data from the large-scale buyers, and then this data is further translated in some sort of reference, a credit reference pool, which basically part of the agreement that we have with the financier is to use this data as a mechanism to lend. So that's now our business process in terms of how do we, as you say, it is a two-sided market. So where we are right now, the 9 months that we spend is mostly in terms of engaging key stakeholders to be able to develop a methodology or a platform where they can actually consume that data to make lending decisions, which we have already achieved. So right now we have buyers joining up, and buyers, I mean the large scale. And for instance, let me just give a name: Kenya Medical Supplies, which sources about $500 million worth of medical goods, uses our platform to manage their procurement. And now all the suppliers that KEMSA has, which is about 600 of them, are onboarded of our platform, and then the bank onward extends the facilities or the product we have developed with them to these lenders. In this case, to be exact, in terms of what we're doing is the bank has provided about $10 million line of credit to all the KEMSA suppliers who are on the platform to access if they have a KEMSA purchase order. And they don't need security, and this credit can be accessed in about 48 hours. So that kind of product only exists within Zetova. So our product development process does not just include development of software. It actually has included development of relationships and certain data processing engines which provide information to the buyer to the financier who now can lend within the platform. So why we are business ready right now is because first of all, our data models and our reporting is being consumed by one financial entity. We have 3 more banks who are taking this up. And as you're aware, the central bank is trying to move away from the CRB methodology, trying to find ways of better informing or better find ways for banks to better be informed to finance, away from the traditional methodology. So our platform is more of our innovation is a mix. It's not just technology or a platform where people will join and access the buyers. Is what we've done to get where we are. First of all, to access information, and first of all, to get buy-in in our methodology, which we have. And then second of all, in terms of our go-to-market, who is bringing the users on the platform. So that's basically how we are organized. And but in terms of our customer, the customer is basically the supplier who's the SME, who's accessing credit that has been channeled through the platform.
All right. Can I come in?
Yes,
Aniko, you're done? Yeah? Okay. So thank you. Yeah, thank you very much. I must say, I think I feel a bit like my co-angels. I'm a bit confused on the model because it's from your presentation and what is said, it's still a bit unclear. So I was trying to kind of summarize it with the tagline that you have in your presentation, which is essentially a procurement marketplace. You're digitizing the procurement marketplace. So that I understand, as you said, but sometimes during the conversation, the way you're presenting it, it makes it very confusing to us. So if you are going to tell us in one sentence, really, what Zetova is, that would be helpful.
Okay. So Zetova, Okay. So Zetova is an interactive platform that provides collaboration between the key actors of the procurement sector. So that's what Zetova is. So through this collaboration, then we are able to provide value, different types of value to the buyer, to the supplier, and to the financier. So as we provide
that's more than one sentence. Okay.
Yeah.
So I just want to understand that. So I think maybe in the way you've presented things, and if you go back to your, let's say, I don't know which slide number is, but the one where you explain the platform, or at least the one with the suppliers and the suppliers, buyers, and financier, it will make it clearer if you had like arrows and a sort of description around it to make it very clear. When you have a marketplace, it's always easier to really define which roles each of the financiers, which you talk about in a way, but it makes it complicated to us to say, okay, what are your key revenue streams, right? One, and two, how are you going to scale? Because essentially what you said is you are B2G, really. What you're telling us is business to government, because government is the biggest organization that does procurement across Kenya. Fine. And it's generally across the world for that matter. So the scalability is potential. So that would be good to have a look at it. So that's just a comment on the side. The other comment I would have is, for you, one, who are your competitors in Kenya or East Africa in general, in Africa, and then globally, right? Because I didn't really see competition discussed in a clear way in your presentation or in the deck.
Yeah, so I don't know how to, so I want us to learn in this challenge, because what we are doing has not been done. We are not selling technology, we are selling value on the platform in terms of, in one line, we don't have competitors. We have, because like if you look at software providers around procurement or supply chain management, we have SAP, we have Oracle, we have TradeShift and all that.
Now we are talking.
Those are software companies. But for us, we actually build, our platform is built on top of theirs in terms of they collect data and all. So yeah,
that I understand. That I understand. So maybe just to really understand that, you may have competitors by segments that you're touching upon.
Yes.
But you're presenting yourself as an overlay above all those actors, and basically you're thinking infrastructure. You're building a procurement infrastructure where anybody can plug in, and you collect the data across different like an API for procurement infrastructure.
Yes.
I understand that. So, but it's difficult for us when you build that to describe your revenue stream and see the potential scalability of it, etc., etc. That is one. I think the other side of the questions I had, and really, is all of that has been done with just 40 members as of today, with a burn rate of $30,000 a month. And remember when you started?
Sorry, 9 months.
9 months ago.
Yeah.
Okay. So I mean, it's not bad, but okay. All right. So I don't have any more comments at this stage. I think for me, if I want to go to my assessment of it, I'll have to pass at this point, even though I find it quite interesting. The challenge I have is that I still don't fully understand the model. And when I don't understand something, it's difficult for me to invest in it, to be honest with you.
Of course. No, thank you.
And I'm a geek.
Yeah, I think it would have been interesting to perhaps even see a short demo of the product and how it works, at least from one or two different perspectives. But over to Nico and Laurent, thoughts?
Yeah, so we are interested in investing in the company. However, we'd like to see, a live demo of the platform, going through the live demo, and then looking at, some equity. So because we didn't really discuss that in terms of, so you want the 150K, but what type of equity are you willing to give up, or is that negotiable? And what is it that, because, I think that initially we're interested, okay, but because I think that the ecosystem that you're in, our company is in the same ecosystem, okay, so we deal a lot with governments, so I think we can help you on that.
We'll hear all about them in a
also
second.
help you on the
But
technology
before that,
side.
I have a couple of important announcements.
But we just
First
want
of all,
to go through
the
it
Nest will be taking a 2-week hiatus.
and looking
So
at
our
basically,
next Nest will be on
the equity
Thursday,
side that
June
you're
18th.
giving up for the 150K.
And that next Nest will be done in collaboration
so we can,
with the Lion's Cage. And we will be focusing on investment opportunities.
So we haven't done our evaluation yet. So because most of what we've done really is
the Lion's
just,
Cage, which is
trying
a group
to
focused
get the
on
product
investment
and testing.
opportunities.
So this is the point
Southern
where
Africa,
we're going
like
on. So right now,
Atms.
probably talk about a convertible or self-equity, where we can negotiate on what makes sense for you.
Yeah. And also the live, we'd like to see the live demo of the platform itself, you know?
Yes.
Great.
Actually, I'm just thinking I could have just done the demo because it's a new, how do I say, how we collect data. Our innovation is how we collect data, how we use that data, and how we organize people around the ecosystem to consume that data, you know, to exchange.
But let me ask you, let me ask you something, you know, a quick question on this. So let's say the government of Lesotho wants to digitize their procurement system, okay? And then they decide to use your platform to do so. And you know, governments they do procurement every day. I mean, when I was in government myself, that was one of the biggest headache that we had. Is when you do the procurement, because you have a lot of turnover, okay, in bureaucrats. So there is a loss of understanding of the procedures, so which prolongs the procurement system unnecessarily. And what happens is that sometimes the donor money that's coming is blocked because of long procurement processes. So does your platform, and Jim, I'm sorry, but you know, because I know the time is tight.
No, go ahead.
But if you can just answer that question, how would your solution help that you know, government speed up their procurement process?
So the automation of the government. So if we were to deploy this, then we basically map out the key, the policy, and policy could be a macro, probably it's a overall policy law thing that probably was passed with the budget, or could be micro, very, you know, in terms of all impress should be processed in 2 days. So the system is built based on policy. So it has intelligent models which track those gates. So for instance, it will give you triggers in terms of violations. It will give you triggers in terms of orders that. Jim, just allow me to show something just for 2 minutes, which will give context to.
Well, Brownlee was pulling that up just to let everyone know there is a poll currently in place, so please feel free to vote. The question is, would you invest in Zotova?
So what you're looking at right now is a part of the platform, and this is actually a live. This is a live demo. So some of the KPIs for this particular user is they would like to see how their suppliers are performing in real time, and their KPIs are basically based in terms of how are the suppliers meeting their timelines, how are the suppliers pricing, you know, quality, the quality of the products they're delivering and all that, in terms of all our standing out orders and all that. How are these being delivered? So what you're asking is part of the tracking. So the system is able to actually track in real time status, position, like in this sense, these are various orders that are being tracked. So so there are some orders here probably which are late. So the system is able to flag late orders, is able to flag late. So anything that is not within policy, like for instance, I was trying to look for a late, you know, so you're able to actually quickly, in a nutshell, so to be able to actually get, you know, a red line if you were to do this manually, and this is now where the other ERP systems are not able to do. Like if you're using SAP, you'll have to download this Excel sheet, and it'll take an analyst about 5 days to produce this kind of, you know, status. That will involve you calling a supplier, you know, all that stuff. So in terms of, like, I think in the presentation, I think we're the first company that is trying to digitize procurement using the policy track, being able to implement policies and being able to build, you know, technology that is intelligent to track policy attribution within a deal. So that's one of the innovations that
So basically,
that is quite unique.
So basically, one of the points for this is you're increasing transparency also into the process.
Yes.
Right. So that's a key point. And that you could also speak to some multilateral lending like the World Bank and the African Development Bank to, if as you're scaling, to speak, because whatever they give to countries, it's tagged to a procurement, a transparency process. And usually that process is not very transparent because people don't have any idea of how to get into that space.
Yes,
So,
and from a study we've done,
it's customizable, right? Based on the client's requirement. Okay.
Yes.
Yeah. So it would be interesting.
Okay.
So from the study we've done, sorry.
And
sorry, Jim.
Doing that demo, I think it was a very useful one. And I'm glad this is something that fits in your priorities, Laurent. I'd love to hear from Aniko before we continue.
Yeah, thank you. So two things, two comments really. One is, I think thank you for the demo. It's a bit clearer now what you're trying to achieve. It's still a bit early for us. As mentioned, we're seed investors, so invest in companies who are post proof of concept and converted those into now longer term revenues. So pass for now, but happy to follow progress. One point I wanted to make, I saw both company being incorporated in Kenya. To the extent that either of you guys are thinking of scaling to another market in Africa, I would recommend that you put together a holdco wherever that is outside of Kenya now, because what happens is at some point, if you go to multiple geographies, it's more efficient to be the holdco not to be in Kenya, but somewhere else. And the Kenyan government charges a withholding tax or capital gain tax the moment you flip up from the Kenyan co to a holdco, whether you sold or not, that capital gains tax is charged. So if you invest in this round and in the next round an investor comes in and that round gets flipped up, this round investors will have to pay a capital gains tax just because it flipped up. So to the extent you have plans not to be only in Kenya but other markets, I would encourage creation of a holdco as soon as possible. Just
great advice. Are there certain jurisdictions that you would recommend for the holdco?
So until about a couple of weeks, I would have said Mauritius because it's the usual place where African companies going Pan-African, and they were on the OECD clear list, but they just got onto the hot seats on anti-money laundering with the EU. I have spoken to some people in Mauritius this week, and they're working to fix that. So they think they'll be compliant by October or so. So assume that happens, I would say Mauritius. And then depending on, I think, where the investors come from, could be somewhere in Europe, a lot of kind of West African, especially Nigerian companies, or the ones who do kind of Y Combinator or 500 startup kind of funding, they end up incorporating in the US, mostly Delaware. So it will a little bit depend on where you expect the money to come from, but for sure, if you want to go beyond Kenya, I would recommend sort of pretty much now setting up a holdco so that the capital gains tax is minuscule at this point. Or flip up.
And I would highly second that. I mean, I think it makes it much easier for us as investors to evaluate the terms and be comfortable with the legal terms without having to hire local counsel. So thank you very much for that comment and that insight. Appreciate it. Well, with that, thank you very much, the Angels, and thank you very much, Branwell. We're starting to run out of time. I did want to share the poll that was taken for Zatova. So let me share the poll with you guys. So we have some interest in the middle range. A couple of people indicated interest above 100K. So there's a bit spread across the spectrum, and however, the majority, I think, are passing on an investment. So interesting. I think Ramil would be very interesting to see more of the demo, and I would imagine that's something that the Angels might be interested in as well. So with that, I'd like to thank everybody on the show, and we will see you in 2 weeks. you very much.